we go into companies with fairly substantial stakes, and our intention is to stay there for a long time.
We like to bring our asset to a larger group or to assemble two, let's say, junior to form a tier 2 player.
We're not scared of re-injecting capital if we believe it's, is the right strategy in terms of development.
We're infamous for having more than doubled, sometimes trebled or more, exploration budgets into the companies where we got involved.
Loads of viewers catching up on our investment insights for one-to-one mining investment. We're in discussion with La Mancha Capital Advisory, which is the managing agent of the La Mancha Fund. The investment firm focused primarily on opportunities in the precious metals mining sector, and we're going to be hearing all about their new fund, the strategy, and the expertise that they bring to bear on the sector. So I'm delighted to be catching up with the three partners, Karim Nasr, partner and CEO, Gérard De Hert, partner and CTO, and Vincent Benoit, partner and CIO. Gentlemen, a warm welcome. Thanks for joining me today.
Thank you, Adam.
Thanks, Adam.
Thanks.
So for viewers who are perhaps new to La Mancha, please take us through a short history of the journey to creating the La Mancha Fund.
So initially, I think it all started from our perspective when the Soares family acquired La Mancha, which at the time was a junior mining company with assets mainly in Africa and Australia, effectively taking the company private in 2012 and operating the assets for 3 years. So it started really as an industrial company. The interest of the Soares family reflected a long-standing interest in the gold and the gold sector. But effectively, the family is very industrial minded. So it's not a family that typically invests in financial assets. So what spoke to them was really looking at the industrial angle of investing into gold rather than investing into gold directly. The company has become a portfolio company, an investment company in 2015, privately held, when we felt that the best strategy to grow the value and grow the value of the asset was to contribute them to listed entities rather than trying to be another wannabe junior miner or your classical premier mid-tier mining company. So we did contribute our assets to 2 companies, Evolution and Endeavour, and had 1 exit at the same time from a third asset. And the strategy was fairly successful. So in 2018, we decided to recreate a full team to pursue new mining investments. Obviously, it takes time to build a team. We had the luxury of being able to draw on the know-how of people who've been associated with La Mancha for a long time. Vincent, for instance, was the first person to bring the La Mancha idea to the family. Gérard has been working for Endeavour Mining for a very long time. Myself have been working for the family. So we did spend time to structure a team, hone our diligence skill and investment skills. And we wanted to effectively progress on a very sound base. We started attracting interest from other capital providers. And at the beginning of the year, it was decided that the best way forward was for us to contribute all of the assets into one investment fund, which is a Luxembourg-based fund, and accept third-party capital to literally continue what we've been doing for all these years and do it basically on a slightly more expanded base.
Excellent, thanks. So with that in mind, what are some of the advantages that you're bringing to bear with this switch to a fund model?
So from our standpoint, it's really the main advantage is twofold. Number one, it gives a structure that's clear to investors and allows us to raise money and to expand our business and to expand what we're doing. Given the reputation that we've built in the sector, for right or wrong, we have an incredible amount of pipeline coming our way from companies that seek our support, and therefore there's a lot of opportunities. And so to have a bit more capital and capital that's long-term minded like us is really important. The other part of it is it does create the ability to provide liquidity to our investors. We're an open-ended fund, so people can redeem their money within a certain time frame. I think we also have the asset base that can avail us to provide this liquidity to our investors without having to change the investment mandate, in the sense that our investment mandate is long-term minded. We're patient capital providers. And the structure of the fund and putting all of the assets together at various maturity stages allow us to, on the one hand, serve liquidity to investors if and when they want it, but also to keep with a long-term mandate.
Excellent. Okay, so what's the overall strategy for La Mancha Fund today? Has much changed in the thinking there?
So I'll take a crack, and then Vincent can probably add to it, Gérard as well. But effectively, it's a new fund, but it's not a new investment strategy. Our strategy has been to provide capital to junior mining companies and allow them to expand both organically and inorganically, and effectively out of that create companies with more substantial capitalization, more liquidity, the ability to attract the best talent, the ability to think about their portfolio, the ability to marry prospective assets with the ability of generating cash flows today, which we really think have a place in the market. And we've been successful into that in the past. I think the two things that will change is effectively we will probably be looking at doing a little bit more into the late stage development, which typically we hadn't addressed in the past, to a certain extent because the number of opportunities into the space that we did address in the past is drying out, and we see very good projects coming online. And then the second part of it is the fund will diversify up to 25% into other metals than gold, mainly when we see that we have a replicable skill that can be useful to the investee company. So really I think what we're pretty good at is figuring out what we know, what we don't know. But in terms of strategy, the objective there too would be to assist junior miners to expand and become intermediates or possibly senior companies.
Mm-hmm. On the approach and the investment strategy of La Mancha, we are going to replicate what has been the success of La Mancha so far, which means that it's a strategy in 3 steps. Acquire companies at low, undervalued, let's say, in a special situation, help the management to turn around the company or to grow a mine, and last, help also then after the management to consolidate the companies with other assets in order to form a real group. It is what we have done with Endeavour and with Evolution. It has been successful, and it is what we would like to replicate.
Let's focus on your process. Initially, when you're identifying new investments, new projects, how do you balance the technical analysis versus the financial analysis at this early stage?
Generally, first, we have quite a lot of inbounds that are coming from different people that we know. So we have a quite extensive network. So every week, a lot of projects are sent to us. Of course, we decline a lot because they are not in our mandate, or it's not projects that are advanced enough to spend time on them. But we retain some of them and make a quick assessment of do they have rather good assets? What is the management team, and what kind of return we can have from those if we were to invest? So that's the first question that we try to address. Once we have gone through that, and if we decide to pursue, then we move to a due diligence phase, where the first thing that we are looking at is the assets. We are not trying to address all the diligence, but it's much more the team of Gérard that is looking at the asset quality and the potential of those assets. And once we have judged that, and if the case and the investment case has passed this milestone, then we move to the traditional transaction phase. But what is the most important for us is to assess the quality of the assets and the quality of the management that is going to run this asset.
What we have done internally, we have really well structured a DD process together with the team. And I will come back to the quality of the team and the importance of having the right person to assess these projects. But part of this well-structured and developed DD process that we have put together, we try to assess a few things. Is one, highlighting any fatal flaw, and of course the project doesn't go. Of course, assessing the review of the project, and third, looking at the upside of the project. In regard of the point 2, which is most of the project that we are reviewing, we try to create a matrix that we call the modifying factor. I don't want to go too much into detail, but each of the part of the project is reviewed in detail, and we assess what are the factors that's going to modify it compared to the original value of the project. And we modify with our own factor. It can be positively or negatively into that vendor case, and we try to assess that project from that perspective, and then we create our financial model to review that. Part of the review of the fatal flaw and all these aspects, we're paying a lot of attention to also the long-term value that we can create in. It can be through the exploration, but also in terms of leverage, and we know all the ESG aspects. That's something that we also pay attention to, that because we believe once we have some kind of we pass all the fatal flaw, we can improve the system, as Vincent describes in this process.
Adam, maybe just to finish off on this topic, there's an important point which I think we'll sometimes have difficulties to convey to people who bring us opportunities. We go into companies with fairly substantial stakes, and our intention is to stay there for a long time. And therefore, it's almost a matter of you want to have enough confidence so that you go into something and you're wedded to it. If it doesn't work well, you're going to have to work on it. If it works well, it's beautiful. But typically you'll have to put more capital, et cetera, et cetera. So our process is a long process. And so very often people come to us saying there is a raise tomorrow for this or that company. And typically we say, sorry, guys, not for us. However, what we tell companies is let's stay in touch. Let's keep kind of like looking at what you guys are doing so that we can do enough work ahead of time. So when there is a subject, we can be the right partner. And the reason is we don't trade out of investments. We fix them somehow. And so we can't vote with our feet. And that's where we need to build the confidence to know that we want to support a project, we want to support a team. We're going with our eyes wide open on the risks. And so if those risks materialize, we will help addressing them and will help mitigating them rather than saying, okay, I'm going to sell my position.
Absolutely. Excellent. Gerard, you alluded to it in your last comment. Let's talk about the main skill set. How would you characterize the skill set and your domain of expertise?
Yeah, perhaps I will start, and then Vincent and Karim will also add, because they also have their own part of the team. But from my perspective, really, what we have put a lot of efforts on, on getting the right people, but mostly the people who has been on the field, who understand the business, who's been there before. We know how difficult it's going to be the execution. It's just beyond the numbers, is really assessing the possibility of executing the plan, because this is where we want to be. We're not just there for a short period of time. So part of that process, we pay a lot of attention in the recruitment process to make sure we get the right person with us and that we can assess the project correctly. So Vincent, perhaps, and Karim?
Yeah, so overall, our team and our investment team is divided in two parts. 50% of the guys are experts in mining, in geology, and 50% are much more in the investment side, traditional, like investment bankers. So we have in the mix of those two competences makes that we can go fast and not miss crucial aspects on the technical basis.
Okay, let's focus on then when you are invested, and you've alluded to some of the skills and strategies here. But what's the approach as a major shareholder with portfolio companies? So
generally, what we do is that we take a substantial stake in the company. We are not here to hold 5% of a company. We generally take between 20 and 30% of a company, which means that we have a very influential stake. And with that, we asked for some rights, including the fact that we want a board representation. We take 1 or 2 seats at the board, no more, because we don't have to have the majority at the board or to have too many people. We like also to work with independent board members and different competence in order to check that the plan that we are contemplating is achieved correctly.
Absolutely, great. Okay, that's great insights on the talent and support as we've run through, but let's focus specifically on the value creation side that you help with for your portfolio companies. How do you assist companies in creating that organic growth, and how important is this patient capital approach in delivering that?
The reality, Adam, is that mining companies very often require capital for projects or for growth or for organic developments. And one of the curses is you could find a very good deposit. The market is going to look at it and say, shit, they need to finance it, and going to worry about it, right? So if you do have that patient shareholder that can bring that capital to your project and show that there's somebody that's going to be supportive no matter what happens, it's super helpful, because then management doesn't need to worry every morning about where's my share price today, right? We don't look at the share price on a very regular basis, to be honest. I used to be a fund manager in a different industry. I was glued to my Bloomberg. They, you know, whether we've done 1-2% today or tomorrow doesn't matter. What really matters is really the long term. So being able to count on a shareholder that's not going to care about whether what you're announcing tomorrow is going to get your stock to tank, you know, 2, 3, 5, 10% is really important, as long as you're doing the right thing. So that's the primary aspect. Then beyond that, we also give confidence to companies that they should spend in the right places. We're infamous for having more than doubled, sometimes trebled or more exploration budgets into the companies where we got involved. Gérard can talk more about that, but it's been an amazing success from a discovery standpoint. But more importantly, it's been the most effective capital spend, if you like.
I think it's a good point, Karim. Also, we should raise here that we're not scared of re-injecting capital if we believe it's is the right strategy in terms of development, creating growth of value to the shareholders through exploration or other kind of structure. So as Vincent and Karim described before, we're here as a long-term investors with the management.
Excellent. Okay, so how do you look at exiting investments, sorry, and what's your targeted return for the fund?
So overall, the performance of La Mancha as a holding company, but also as a fund since June, is overall very attractive, because we have done 16% return since August 2012. It compares to the gold price, which is flat in that period, but we were doing also that performance when the gold price was down. We compared as well very we outperform also all the index, the GDX and GDXJ, which are declining during the same period. So this has been done through the strategy I was mentioning, but also through the fact that we are creating value when we are exiting from some of the investment. What I was looking at, and one thing that we are targeting, is the consolidation of the sector. We like to bring our asset to a larger group, or to assemble two, let's say, junior to form a tier 2 player. And this is what we have done in different occasions. So the merger, the consolidation to create regional champion is really the preferred solution for the exit. It is what we have done when we exited from La Mancha, Australia. Karim was mentioning at the beginning that we were operating mines, so we are exiting from that investment by bringing this to Evolution Mining, which was a kind of junior slash a small tier 2 at that time. It was in 2015, and then he has really started to re-rate thanks to this merger. We did the same with Société des Mines d'Ity, on which we were invested between 12 and 15 that we brought to Endeavor. And then we create Endeavor, and we give them this capacity to build a performing portfolio. So that's one thing. And after that, we generally have a stake, 20, 30%, then we can monetize on the market. The second possibility is to make effectively a capital market solution. So it could be IPOs, it could be a disposal on the market. Karim can come back on that. Is the way we have exited Evolution, which was one of our very big holding a few years ago. And we have done that generally on a long time period in order to manage the share price and to be sure that the company is not suffering from our exit. And the last thing is also the disposal for cash, which is a much more straightforward exit that most of the private equity are doing because they need to monetize at the point of time. So, for example, we exit from our investment in Sudan by selling this asset to the government for $100 million.
Okay, I wanted to come on to outlook for specific commodities. Obviously, metals prices are a very important factor when investing in the mining industry. What are your expectations regarding the gold price? And given that that's your primary focus, I wanted to get your view on the outlook for gold.
So, Adam, we purposefully don't want to have an outlook on gold. And the reason why we purposefully don't want to have an outlook on gold is people investing in us have an outlook in gold, otherwise they wouldn't be investing in us.
Yep.
So from our standpoint, when we're looking at our portfolio and we're looking at our investments, the main aspect is resilience, because we know that if gold goes down, we are going to be exposed and we're going to be suffering. So the whole strategy in terms of looking at returns, looking at the assets, is really about resilience. Can we survive problems? And obviously the commodity is the problem. If gold goes up, we're going to do well, right? That's where we're exposed. So to a certain extent, we try to isolate from our personal views on gold, if you like, by number one, always applying long-term gold prices which are below where we are. Sometimes we're going to use the forecast, sometimes we're going to use a lower price if the forecasts are above the spot, for instance, just because we need to make sure that whatever we're getting in, it's going to be resilient to gold prices declining. Now, on the other side, we also look at trying to have a mix of, call it, very low producer or very low cost producers on the one hand, so that we can basically enhance that resilience, mainly because those guys would be in a better spot if gold was to decline to then expand their portfolios. Conversely, when we're putting money into developments or companies who have higher ASICs, but where you have the opportunity to reduce costs, we know that we're taking more leverage on gold somehow. And it's all about achieving that balance within the portfolio so we have something that stands together. We also have the intention to diversify across metals. Our primary desire is to really be part of the energy transition by being into EV metals, but we also think there's a good case for metals who have multiple applications where we can really understand the processing, the mining space, the mining stages, and help the companies achieve their goals. We have a positive view on copper, lithium, graphite, nickel, and so we're looking at investments into those spaces in addition to gold.
Very good. Okay, we've got to move on swiftly onto ESG criteria, which have obviously become integral for investors looking at new companies. What's your approach when investing, and how do you deal with ESG KPIs during the holding period?
In mining, ESG is very important because we are not doing ESG for the sake of being nice with investors. ESG is really completely integrated with the management of a mine. Right. So we like to say it's consubstantial to the mine, which means that if something goes wrong with some aspect, environmental or with the communities or something, the risk is that your mine closes. And that's a failure. So that's why you cannot deal with ESG like dealing with ESG, for example, in banking or in other sectors, is even more important. And even if mining overall has not a very good image, in reality, when you look really what the miners are doing on the ESG side, one can be very surprised how advanced the practices are. So what we do at La Mancha is generally that we look the different criterion of ESG. We make a deep analysis before investing and diligence on the ESG criterion. We look at, of course, the relation with the communities in emerging countries, but also in developed countries, because in Australia, if you are near a lake, which is the case, for example, in valley pollution, if you have some problem with the neighbors, if you have a problem with the farmers, if you have a problem with the association, of course, you can get a lot of trouble. And that's why those mines need to communicate very well with the population. We are also doing a lot of diligence on the government relations, because it's also very important, specifically when we invest in emerging countries. Of course, CO2 emissions, what are the way to produce the electricity for the plant, for the mine. With the environmental issues, of course, we are checking that all the norms are respected, so on and so far. But what we are looking overall, we are looking at what we try to determine is that if there is any fatal flaws, right? If we feel that there is some fatal flaws, if we feel that the companies in which we are investing has big weaknesses in some areas, generally we don't invest, because that could lead to a failure that will be very damageable for our investment. But if we don't find fatal flaws, what we like is then after to really try to make some progress with that company. So we invest, we know that they are not good at everything, but we know that there is a room for improvement and that we can, during our holding period, improve the situation on the ESG perspective.
Fantastic. Okay, my final question, just wanted to talk about the opportunity within the junior miners at present. There's been a lot of underinvestment in the sector over the last decade. Things are opening up a bit more now, but how do you see the opportunity amongst the junior miners at the moment?
I will take this one, Adam. I'm the geologist of the group. And Adam, that seems so obvious for me, that there is a value there. I've been working for a lot of juniors company before they become majors like Rheingold, IAMGOLD, and of course in my life, Ascendment is Endeavour. All these companies is really creating value to shareholders through exploration. And we can see the success of Rheingold. So from my DNA already, it's there that we can create that value. But from the perspective where we are with LMC and the fund is really understanding how the exploration can create a value through the portfolio. So it's really beyond the replacement of the reserve or the resource. Is how can we extend the life of mine and the resource of the project. So this is part of the critical point of what we can do. We know the industry hasn't replaced is a full extent of resource and reserve. So we definitely, as we described before, part of our long-term strategy is to develop that long-term and creating value through that. So it really, for us, when we look at that universe, is to understand really who's capable of, putting together a strategy and who are in the management capable of achieving that strategy and creating value to shareholders. So from that perspective, I think exploration is a real creating of value. And you certainly saw a recent announcement in Guinea where, some of the juniors exploration company is creating a huge amount of value through just the exploration. So we strong believer on the team. And this is why I've been joining the group.
And this is also one of the elements what we find in junior companies and in companies that have not enough resource and financing. Generally, exploration, once they have discovered and they have a DFS, they have a survey, they have the reserve, they do not, in their plan, they allocate the capital to build the mine, to operate the mine. And at the beginning, exploration is poor, let's say. And this is where we are strong believers, as Gérard is saying, that exploration is key to create value. And generally, we push the company not to give up this subject even during the construction period. We want them to continue to invest in exploration in order to, in parallel of the mine growing, to continue to expand the resource and show the market that beyond the reserve which has been defined, there is much more potential. And it pays off.
Indeed. Very good. Okay, well, gentlemen, look, we've covered some fantastic insights into La Mancha Capital Advisory and La Mancha Fund. It's been very informative indeed. Thank you very much for speaking with us, Karim, Gerard, and Vincent. Thanks for your time.
Thank you, Adam.